I do want to welcome in our next guest, though. Joining us, Jeffrey Small, partner at the Retirement Income Source. Jeffrey, great to have you back on the show here. I mean, not seeing too much of a reaction to the PCE report that we got this morning. I think we're at a little bit of a holding period here as everybody waits for Nvidia. But you mentioned something in your notes that I want to kick things off with. You say you think that the probability of a meaningful market correction over the next 12 months is elevated. So what are some of the potential triggers that you're watching there for that to happen?
Well, obviously, the rate environment is definitely a big concern. If we hit 5%, things cost a lot more on the 10-year. If the 10-year goes to 5%, we've got problems. Any type of, let's say, earnings disappointments could cause a problem as well. But really, we're looking at maybe a 10 to 15% downside scenario here, and that's just a great buying opportunity. We don't see us going into a traditional bear market, Marley, at this time, because earnings are just too good.
And so you say that you could see a catalyst in earnings, potentially earnings disappointment. That lends me to ask what your expectations are for Nvidia today, because I can make no argument that they've been disappointing ever, but the reaction has been disappointing in many of the prior quarters. So what are your expectations, not just from the company and what they're going to report today and what they're going to say about guidance going forward, but also in the reaction from the street?
I think the sell the news event that NVIDIA's had the last 4 reporting periods, the stock has fallen on incredible numbers. And so the market has what I would call a fear of large numbers. We've never really had a $5 trillion valuation, Marley. And so there's a lot of tentativeness here. But, you know, NVIDIA is going to give us their report today, and the earnings are going to blow out again. Their margins are going to stay the same. And they're going to give us an update on the entire health of the AI ecosystem and the AI spend. And unfortunately or fortunately, it's going to be stellar. Now, will it be a sell the news event this time for a 5th time in a row? I don't think so. I think that Nvidia is actually going to rise this time. You know, options are showing a 5% increase one way or the other, but I see the stock going up from here. I think it's reasonably priced, and out of the group of stocks that I like, it has the best chance of doubling over the next 3 to 5 years.
So doubling over the next 3 to 5 years, how durable is the moat for Nvidia if competitors and customers even, I mean, we have this customer concentration concern when it comes to Nvidia, but many of these customers are now aggressively developing their own alternatives in-house. How durable is their moat if that continues?
Yeah, but they're using some of their Nvidia chips, the ones that aren't developing the GPUs. And so, you know, I think if you look at their moat, it isn't just the chip. You know, it's CUDA, it's networking, it's software, and an ecosystem that is deeply embedded across all the hyperscalers and AI developers. The continued AI CapEx and next generation Rubin cycle is going to keep promoting the stock. Expectations are extremely high, Marley, so any slowdown in AI spending could hit the multiple pretty quickly in all of these stocks, especially NVIDIA.
And what other names do you like right now in big tech? I mean, NVIDIA, obviously the focus because of earnings today, but is there anybody else you like in this trade, or are you staying away?
Well, you want to be smart about what you're buying in tech today because valuations are super stretched. So look at companies that have wide moats. You know, Microsoft has got a great moat. NVIDIA's got a great moat. Alphabet's got a great moat. Microsoft owns one of the deepest enterprise ecosystems in the world through Azure, Office, Security, GitHub, and Copilot. Customers are already locked into that platform, which gives them enormous distribution for AI. In other words, they own the railroad that AI is built on, and AI is driving the train down the track. Alphabet is a great valuation play for a moat as well. When you look at search, YouTube, Android, cloud, Gemini, one of the best distribution advantages in technology. It's also the one I like the most on a valuation basis relative to the quality of business they have. But that's where we are today.
And so you like them, you think they're the most attractive on valuation. Is that because the markets are underestimating Google's AI opportunity, or perhaps even overestimating the threat that it poses to search? Because I feel like every time their earnings come up, I have more and more conversations about how we're going to see search affected by AI, and search still seems to perform well.
I think the overhang on Google, and if I had $100,000, you know, I'd put 50% in Nvidia, 30% in Microsoft, and the rest in Google. But you're right. There's the generative AI generative AI is going to potentially disrupt the search economics on Google. And we haven't seen it quite yet. We saw a little bit of fall off last quarter, but I expect that trend to continue as folks become more dependent on the searching through AI. I mean, we're already doing it. Everybody's doing it already.
And I know you personally own the three names that you mentioned. Your firm is recommending them. How do you separate your investment conviction from the fact that you also have a financial interest in these names?
Well, that's good news because we're walking our talk, right, Marley? I mean, we want to believe in what we're recommending. There is no ulterior motive here. Our dynamic of investing is not going to impact the valuation of these companies. And so you want to own companies that have broad moats at high valuations that are going to have revenue growth regardless of what happens with the AI spend and attractively priced. And these companies, even though they're ginormous and then we're dealing with the fear of large numbers, they are attractively priced at this time. And so look at it like this. Nvidia gives us the highest upside. Microsoft gives us the best risk-adjusted quality. And Alphabet gives us, let's say, the most compelling valuation.
Jeffrey, always great to have you on. Really appreciate you taking the time to join us this morning. Jeffrey Small, partner at the Retirement Income Source.